can you hear us? Hear us? Can you hear us?
Morning. Yes,
Good morning.
I can hear you now. Sorry, the fire alarm was going off in here, so I didn't want to unmute, and you would all get a large klaxon in your ear.
Oh, okay. Thank you. We're just. I think we're just about to get started in a second. So make sure you can hear. Thank you.
The members of the pension board, 5 of this morning. Are we expecting more? The number of name cards out. Yep. And we are. Yes, we did apparently hear that she. And the team who are with, including Joe. So first thing then is to deal with any apologies or changes in membership, if we have any.
Councillor Brady.
Apologies. Nothing else. Second is the minutes then. You received a copy of those minutes, duly circulated. Were there any comments? Minutes? In that case, I'll move from the chair that they be adopted. Seconder. Thank you for that. Everybody in the usual manner. That's carried. Thank you. Next one is to receive any declarations of interest. Do we have any declarations of interest? We don't, but we can welcome Vanessa. Right. Public question time. There's nobody in the public gallery. Do we have any written Questions from the public? Good, so we'll dispense with that. Thank you. Item 5 on the agenda then is the structural review. And I'll hand over to Joe, which I suspect I'll.
There will be occasions when you don't hand over to me.
Probably will.
So that's the, just say. Just quickly, very quickly before we start this, I just highlight to members, please. For today is items 16A and 16B, where I'd really like to focus quite a bit of time. I've suggested to the chair that depending on how we get there, we may take a short break so people go and before we tackle that item. But we'll see how we go from there. But just to let you know, so thank you. Sorry. In terms of the structure review, the review was due to be, the options paper was supposed to be presented to corporate team, but due to pressures with the council's budget and focus that required, that report deferred until the 7th of March. I'm expecting, I've seen a couple of drafts of the option report, expecting the final draft by the end of this week, which will then be reviewed by Wendy as Chief Exec, Chris Ward, Director of Finance, and Kerry Hubbleday as Assistant Director of Finance, as sponsors before it will be presented to corporate management team on the 7th of March. At the moment, it's an options paper, so various options available to the council in terms of its role as administering authority, and I'm not sure what will happen once it's been reported, but I'll report back to corporate management.
I'd probably point out, Chair, that we reported back to the board meeting on our visit to the access meeting in December, the first of that kind. And as I said to the board meeting, we were there just in our capacity as board members, so looking at governance, risk, rather than taking a view on investment decisions. View of the committee. So for me, it was a positive visit. In terms of risk, we're looking at risk to their strategic objectives for the for access. So cost savings through economy of scale, improved governance, through responsible investment. Those kind of objectives, kind of risk. We can't really make an assessment just on the basis of one visit. I think over a passage of time, how achieved to give a fuller. But for me, there were positives. The fact that there's been set up an independent review of meeting its objectives, lessons learned. Review stakeholders and a review of the risk management at how risks are identified and the important members. So that will report back to the Access Committee in June. And certainly the meeting looked at the major risks. And the delay on the and Barbara was able to raise the point of cyber, ask for some information, insurance around cyber risk. So overall, that was a positive for look over time, but it's very useful for information purposes, considering so much of the fund is also considering it quite an interesting year for guidance to. So that was the main thing I would highlight. Other than we looked at the funding strategy statement, which is out to patient, and the funding strategy statement is really the way the actuary takes into account the market conditions, risk to invest, to establish, with the aim of establishing a stable long-term contribution. Assumptions, obviously, we're in a situation, a global outlook, say the best as a board at that funding strategy statement. But there were no points, substantive points to feedback to the committee statement. So those were the items that I out.
Thank you, Martin. So, anybody got any questions on the chair that we thank Martin for continued efforts here, and we accept those minutes. Next one is item 7 on the agenda, which is the audit update. We've all been looking forward to reading.
Very much. I'll try and make this as exciting as possible, but I'm not sure that I will be able to do so. The audit work for the pension fund year ending 31st began on 6th January. Ernst & Young, the external auditors, have provided 6 weeks of dedicated resource. Work will be closed by the end of next week, but unlikely case. We have been responding to, Joe has been responding to queries. Mostly they're being accepted. There are a few the internal auditor, the internal review by the audit manager and audit partner have been completed, and they have identified no significant issues to bring to attention at this stage. Just to let members know, the pension fund accounts can't be signed off until the council's made. And even if the pension fund audit's completed, in advance of that, the pension fund accounts form part of the council's account. That is what delays the advisor sign off. It's intended that the audit is presented to the audit committee on the 20th of March for final sign off, following which we'll be able to complete the next. Just to warn members, or in a slightly in advance, that planning work for the March 23 year end audit can't start until the 22 year end audit is completed, so planning won't start in April. And the regulations for the accounts and audit amendment regulations for 2022 have removed the extension, the second extension on the completion of accounts, so they are now due to be 30th of September 2023 rather than the 30th of November, which was for 22, which we've obviously missed. So there'll be theoretically a very short turnaround between planning and completion in the whether that actually happens. And there's also just confirmation that Ernst & Young have been reappointed as auditors of the pension fund and the council from 2023-24 until 27-28. how they're gonna catch up. So nothing really to highlight, just mention to some of those matters. Take any questions.
Any questions on that? Thank you very much. And we'll do the normal of noting that. Item 8 then on the agenda, which is page 15 in your, which is to receive and adopt the draft annual report accounts for the.
Thank you. The deadline for the publication of the pension fund's annual accounts is supposedly the 1st of December, year end of the year end. March 22 should have been published on 1st of December 22. We did report previously that due to external audit, not meet that statutory deadline, and that's been noted. So we are intending, we're still keeping everything crossed, the final annual report, 31st of February. But the Local Government Association have recommended that draft unaudited report, so that information is available on pension funds and then updated once completion. So what we're seeking today is for approval of the draft annual report and accounts subject to any changes from external audit, and approve that is published on the pension fund's website as soon as practicable after today's meeting. We will then work with the auditors to complete the reviews that the auditors deem necessary to the accounts and correct spellings. And then we're seeking approval from the that you delegate authority to me in consultation with the Director of Finance, in discussion with the Chairman of the Pension Fund Committee, to update the annual report, publish them, completed, and then notify you then the external audit report next available in May, and hopefully present it to their meeting on their review. The document that I've presented, I haven't presented the full draft annual report accounts because it's over 200. Initiate an extra 250. But that is available on request, and it will be at today's meeting. So I've highlighted in those areas that you haven't and in the briefing note that I sent through earlier last week, I've highlighted the key pages that I to look at. The knowledge and skills statements on pages 4 and 7, we'll be talking about knowledge later on in the agenda, but I would point out something that the board mentioned. On page 46 of your pack, there is a table that shows attendance at development sessions. A lot of X's, black cells. Committee membership last year was challenging. There were a number of changes, and the board membership was also challenging in the fact that we've pretty much dissolved the board. So there's nothing to worry about in terms of the level of attendance. In this financial year, we've had few, and they have been much better. So I'm in a better position. But as I say, there's nothing really else that I wanted to say other than to just point out that the 21-22 accounts are governed by the 2009. So the funding strategy statement and the investment strategy statement and the references to the valuation all relate to the valuation. If we complete the 22 valuation before accounts are signed, auditors have to do a significant amount of more work because it's adjusting post-balance sheet event. So we're planning to complete the valuation after the audit committee on the 21st of March, so that we don't have to do the additional work and reopen the pension bit. If there is any delay to the council's accounts, valuation has to be final 31st of March. So we may then have to reopen the is the case. We are keeping as many things possible that we're not going, but just to warn you that that is the one risk that we are facing. Don't anticipate any issue. Pension fund it. We are not actively engaged councils as a pension. To draw attention to that risk, we need to be aware of. And where I'm seeking the delegations, just to say, if you don't agree the delegations as requested, we would need to convene a special committee meeting between the 21st of March and 31st of March to accounts. Fairly certain you won't do. Move the recommendations, but very happy to take any questions.
Councillor.
It's more of a comment, really. Thank you so much, Joe, as always, for giving such a comprehensive but very clear and understandable summary. I'd just like to say, in terms of the attendance, I seem to find apologies because it does clash with my cabinet member duties. So just to make the point, it's not that I'm sort of not attending, but I have done the online training. So I did manage to do that. And also I'm fully in support of delegating as you recommend. Thank you.
Steve.
Thanks, Joe, for outlining all that. I guess we're in the same boat as other councils in terms of the delays with external audits and not much we can do, but even if we did change provider. But ultimately, is there anything we should worry about? Because missing statutory deadlines and things like that are obviously phrases that don't sit very comfortably. I know we're doing everything our end to it. I just wondered, ultimately, someone come down and say, look, this is going to happen.
We have been stuck in a cycle for a little bit, and it's not of our making. We have filed the breaches, and the remediation of them has been. I think we're keeping up to date with it. It's simply a question of getting ahead of the game rather than being behind the game.
I would say in certain fora that Joe and I have attended, we are by no means the worst functioning authority. There are some pension funds who still haven't signed off their 2021 accounts because of delays to the council's audit, which they are linked. So, we are doing our best with the restricted resources that we have and the capacity that we are able to do. We have, to an extent, taken advantage of the delays in the external audit to spread our accounting work and reporting work to fit the deadlines that are set. This is something that we are very conscious that is not best practice, but given the resource that we have at the moment, it's really all that we can do. We will continue to work internally to meet the deadlines as they are set. But again, we are very much subject to the external audit completing both the audit of the pension fund and more specifically the audit of the council. So all we can do is just raise issues with the council. The Director of Finance is aware of the delays and is signing them off, agreeing them with the external auditors. So we can't do very much more other than note and do the best that we can to be ahead of the game.
I think we're aware that quite a number of other councils are in particular difficulty at the moment. Steve as well on that. It's worth adding that into the equation. And there is a further complication, of course, from those councils that have recently declared 114. Those who are in the pipeline who may be considering 114 about how they conclude their accounts and all. Happily, we've avoided that, provided our budget gets agreed at the end of the month. We have, and the audit goes through swimmingly well in March. But I think, you know, we have to be very mindful that we live in a new reality at the moment. Stresses on us and every other council are quite high. And no part of the operation will be immune from it, including all the regulatory processes about signing off and all, etc. So, any other questions we've got on this? Councillor Garrett.
Thank you, Chair. First of all, on the matters surrounding the lateness of internal audits, that the chair of audit committee is very aware of that situation. So, but anybody who wishes to discuss that with the chair of audit, I know that he would be very welcoming of that discussion.
We could delegate that to the vice chair of the pension fund committee to discuss
that
it
might
with
be-
the chair of
they
the audit
could have a
committee.
very useful conversation. Whether it be fruitful, I don't know. Just thinking about what's actually before us today, so the two sort of things I have in mind are the contents complete or the indicative contents complete. From what I can see, that is the case. And are they materially correct? It is. We cannot possibly know each and every figure of that, but I have no reason to believe that they are not going to be materially correct, subject to those other discussions around audit and whatever. So I'm very happy with you. Otherwise,
Just as a slight reassurance, when the pension board reviewed this report, they also received a copy of the CIPFA Chartered Institute of Public Finance and Accountancy annual report disclosure checklist, which basically is a list provided by CIPFA that says your annual report should have this information in it. The board received that, which had been completed by Joe and myself, and were comfortable that everything that was required to be in the annual report on that checklist is in the annual report. In terms of material correctness, the numbers are as presented in the council and the pension fund's financial statement in the financial systems. As I say, the auditors have not identified any significant issues. Most of the issues that the auditors are picking up on at the moment are around the ancillary disclosures in terms of the detail of the investments and the analysis of investments, which to an extent is slightly subjective in some instances in terms of fair value hierarchy, whether it's level 1, level 3, and whether it's plus or minus 5% or plus or minus 10%. So there's nothing substantively that's been identified as being an issue. Some understanding of some of our new disclosures actually cause some further queries than we would normally. Paula.
Hi, morning everyone. Thanks for having me. So I am here to talk again about the final valuation report that's going to be submitted, as Joe said, by the 31st of March. We are holding it off until the audit, but it's almost there. So we were confident that we will meet that deadline. In your packs, I was just going to focus on page 97, which is the executive summary of our report. So here we have a summary of the funding position, and it has not changed since we last met in November and presented the initial results. The funding level is up from 2019 to 2022. From about 95% up to 102%. So the fund is now in a surplus position of about 15 million. the reason for the lack of change between the initial results and the final results is because we did not have any significant queries with the data when we came to do the employer results. So it can happen in some funds that we get significant data queries and the results have to be updated between initial and final. And that was not the case here, which is testament to the officers and the admin team that that nothing significant took place. So the results reported in here are as per you saw in the initial results report. If you want to review the assumptions, etc., they are all from page 119 onwards, but I won't go through them just now. I can take any particular questions on them if anyone has any. The new section in this report that will not have been seen in any previous ones is the rates and adjustment certificate, which is page 127. This sets out the employer contributions for the next 3 years. And as Joe's summary report says, they have been agreed for the majority of the employers. There's only a couple outstanding, and we don't really have any concerns with them because of the ones outstanding. They've just raised questions about their rate and their funding position. But ultimately they are in the category of they can pay the council rate. They are academies and can pay the council rate if they like to do so. So we don't have any concerns about those not being agreed. When we set the rates for the employers, we did have consultation we offered consultation to all of the employers and quite a few took us up. Most importantly, the employers that took up one-to-one discussions were the ones who are ultimately going to target exit from the fund at some point in the future. So they're kind of old style admission bodies or community admission bodies who will at some point exit the fund and have to pay a cessation debt. So it was really, really encouraging that they came to the table and were able to discuss their contribution rate and plan appropriately for that exit in the future. So we're confident that they're all targeting a reasonable pace of funding to get there, which was really encouraging and another thing that doesn't really happen across the board. So it was great that they came. The last point I wanted to draw your attention to is that there may be some minor revisions just to wording here and there. This report is draft. The main thing that will be updated will be the section 13 dashboard, which is the last section. And GAD have still not confirmed their requirements for that, which is why that is currently blank. But that will be a standard dashboard that is reported in every valuation report. And the idea of it is so that if you picked up another fund's valuation report, you can compare on a like-for-like basis. For the funding valuation, all of the assumptions have to be set in line with the investment strategy and experience of Isle of Wight Council in particular. But that makes it hard to compare across funds in the LGPS because everyone sets local assumptions. So the section 13 dashboard will then be on a consistent set of assumptions set by GAD, and you're able to pick that up with anyone else's dashboard and see where you sit on a like-for-like basis. So that is the main thing that will be updated, but it's not subjective in any way. There is no decisions to be made around the reporting of it. It's very much prescribed. So I don't think for your decision making there's any worry in the fact that that's not in there yet. There's no particular decisions on that. That was all I really wanted to say, but I'm happy to take any questions, comments, concerns about the report.
Are there any questions, anybody? I think it's a very comprehensive document. I think there are no questions at all. Thank you very much indeed for your update. So on that basis, I'll move items 3 to 5 on the recommendation. That we note the presentation, we approve the draft as it is now, and we accept the delegated authority that Joe spoke to. Do I have a seconder for that? Councillor Churchman this time. Everybody happy with that? Unanimous. Thank you very much indeed. And thank you for the update. Thank you, Joe. Right, moving on to item 10 on the agenda, which is the funding strategy statement on page 31 of 131 of your pack. Joe.
Thank you. I'll start off with this one, and Paula can assist if there are any technical questions that I'm unable to deal with. The funding strategy statement is a regulatory requirement coming out of the annual valuation, which sets the process by which the fund sets its funding strategy and how it sets its contribution rate. So it's got a lot of technical detail in it. We've asked Hymans to review the format of the funding strategy statement this year to make it more structured, easier to navigate and more useful, user-friendly. So hopefully the revised format, which is presented in the appendix, covers those responses. We've introduced in the funding strategy statement 2 new policies at appendices E and F from pages 167 to 172 in your pack. These are statutory requirements to be included in the funding strategy statement, with the ability of the fund to review employer contribution rates between valuations if requested and in certain circumstances, and how we treat our employers on cessation. These are formalisation of existing practice but need to be documented in a formal way. You will also notice throughout the new document there are a number of highlighted statements where it says policy on this will be in appendix or available from the fund. At the moment, we don't have those policies. The intention is to write them over the next 12 to 18 months, and so that they are available in full force for the next evaluation. But obviously, if something happens that drives one of those policies to the fore, we will prioritise that in terms of our process. We have these processes in place. We just need to formalise them and document them and make them available to the employers concerned so that they are aware at the very outset what is it happening and how we treat them. I will update the body of the funding strategy statement to say the new policy areas will be available on request, and work with Hymans to formalise those policies and document them and take them through the board for review and recommendation to the committee in due course. So really the recommendation is that the funding strategy statement is adopted and subject to those minor amendments that we've spoken about, and approved for publication on the fund's website. I'm happy to take any questions.
Are there any questions on this to Joe? No? Then I'll formally move from the chair items 2 to 4 on the recommendations that we note the process followed. We adopt the funding strategy it is and approve the publication thereof. Everybody, I need a seconder for this. Right, Councillor Garrett this time, I think. We'll go round in a circle here. Everybody in agreement with that? Unanimous again. Thank you very much. Thank you, Joe. Right, we now leap forward in the document to page 173, which is the knowledge and understanding update, which we referred to just earlier.
Can I just say thank you very much to Paula for your support in getting all of this work done over the last things, and you can leave now.
Thank you very much. Thank you, Chair. Speak to you all later.
Thank you. So, knowledge and understanding. First of all, what I've presented here is the output report from the National Knowledge Assessment. I'd like to say thank you very much to everybody that participated in the assessment. All but one committee member participated and all but one board member participated. So thank you for everybody that did. The output shows that it's really the collective knowledge that's important of the committee rather than individual. And it's an overall understanding that is required rather than an in-depth, detailed knowledge of everything. It's really important that you as committee members have the right information to inform the decisions that you're making. So making sure that we deliver the right information at the right time is really important. There's no statutory responsibility at this stage on committee members to have a minimum level of knowledge and understanding, although there is on board members, and we are working with the board on how they demonstrate and evidence that. But the likelihood is that from the good governance review, there will become more obligation on committee members to have increased levels of understanding. So what we need to work out is how we do it and how we make sure that we test to make sure that you do it. One of the outputs from this will be to review or create a knowledge and understanding training and development, call it what you will, policy to work out what methods of training we will offer, what resources we can make available to you, and what training plans we will put in place for committee and board. That will then also let us review and confirm continued compliance with the statements in the annual report, which is on pages 45 to 47 of your pack, back under that item, and work out how we do it. So the report that Hyman's have presented does include a suggested training plan based on committee and board members' priorities for training. I would welcome very much your feedback on training and development, how, who, when, where, what is the best way, how do we do it, how do we put this plan together. In the briefing note that I sent round to you, I put some initial thoughts in terms of some training potentially in May for business planning for the fund. So budgeting, staff resourcing, prioritisation of work, identifying what we can and can't do and what we need to do to make sure that we cover all of our statutory responsibilities. Possibly in June, something on cyber security and cyber risk with the council ICT department, and then potentially in July around the accounts and audit, at which point it'd be quite appropriate that we'll be looking at the draft annual report and accounts potentially for, at least the draft accounts for March 23. So that's quite timely in those. Those were my initial thoughts. I would very much welcome the committee's input on how we take this forward and what is the best way for us to support you in making sure you've got access to the necessary information.
Councillor Ward.
Thank you, Chairman. The easiest way for me to assimilate information to have a face-to-face teaching session. I don't find putting a Zoom lesson helps at all. Okay, it's a case of motivation and understanding. You know, you can look at a Zoom, think, well, what does that mean? And there's nobody there to ask. That's my opinion. The timing and the subject's fine.
What do others feel?
I would agree with that. I just think face to face. I mean, there is the opportunity to ask online through the chat, but it's quite often missed. And I think focused. I think training, as long as it's not too protracted, if that makes sense, because assimilating a lot of information in short bites tend to be better. But I think face to face would work for me better.
Yes, I agree with Ian. Or you're sort of reading something. Some people can assimilate information out of a book, but I'm afraid I'm a very practical person. Talk to me and it might go in one ear and out my left toe. Actually show me and talk to me, then it seems to sink in. And we all have different qualities. And as I said, this online learning, it gets boring because there's very little interaction. As Ian said, you can't ask a question. One of my biggest problems with pensions is trying to understand fund managers' graphs. I looked at the stuff from, I think it's Schroders, which came in the pack. And quite frankly, I just look at it and I think, surely they can produce something simpler than this. You get these graphs with blocks below the line, with blocks above the line, and then you get percentages and quite frankly, I look at them and I just don't know what I'm looking at. If somebody said to me, we invested in real estate this year, the benchmark was 3% or something, or 3, and we didn't make it. Do they have to make these things so complicated? And I feel that pensions generally is made complicated, and whereby it shouldn't. After all, we're counsellors. We do this once a month. So, you know, anything that simplifies it and where you can ask a question, the interaction and the reply is much more likely to stay in your mind. Thank you.
It's interesting. I've had a number of feedbacks on this topic. I suspect probably that Councillor Garrett has some understanding of people's learning ability regarding these elements. Reading a block of text that has a lot of numbers in it, some people will absorb them quite well, some not. Reading a spreadsheet with tables of numbers in it, some people will absorb them and many people not. Looking at a chart, I would have hoped that more people would have picked up things from a chart because it's visual than not. But I appreciate that we're all different. We all learn in very different ways. And I think sometimes having that face-to-face session helps to aid the absorption of that information and the dialogue that results from it to amplify it and lock it into our memories. So I think the general feeling I'm getting so far is face-to-face sessions are very much more appreciated. Steve.
Yeah, certainly would agree with all that. I just didn't know what other people felt about some of the questions that we were asked. I thought some were very technical and kind of needed to know the principles, but not necessarily exactly what government department did what. I think some of the questions were perhaps a bit over technical, and you might have understood that something needed to happen, but not necessarily who did it. And in terms of practical delivery training, again, people may have different views. Some people would like perhaps to have training tagged on to the end of the committee, like to have separate sessions. I don't know how people generally feel.
Councillor Garrett.
Certainly I responded and I think there was some free text at the end of the survey about the quality of the survey, and I would echo what Twitter's just said. Some of the questions themselves were far too technical. The other weakness to the survey was the idea that if you were unsure, you actually declared you had no knowledge. Those two things are not the same. And so people would take a subjective view on that. So that ranking type of things, amongst others who took it, it's too subjective to place any weight on that. In terms of how I learn best from that just completely so I learn best from face to face, most definitely, but not too protracted. But my best way of learning is the same way as I learned to ride a bike, as I got on it and I fell off all the time. seriously fell off. It had only one pedal for a start, but which probably didn't help. But what I mean by that is place this stuff within the bodies of report or indications of where the support be in terms of these are the things that you must have in mind in making a decision, and build up that kind of consistent kind of use of that knowledge. Because I've been on countless training courses, and within 3 weeks, I couldn't tell you more than maybe 5% of what's there, unless I've been tried out on it over and over again. So highlighting within the bodies of reports exactly what knowledge should be thinking of, what degree of knowledge, right? And the final thing I would say is knowledge is not understanding, and that's why I'm glad that the two terms are coming out. Understanding is a very different thing. The biggest thing, and actually members are very, very good at this, is where you don't know, ask. So not being afraid to ask within, what does this mean and how much weight should I place? So, but definitely face-to-face, ideally probably tacked onto a meeting as far as I'm concerned. It's just diarising is easier, but not too protracted, bearing in mind if it's after a meeting, my brain will be fried. The final point I'd make about data visualization, Chair is quite right. Some people respond very well to how data is visualized. There might be a case for actually a more general cross-council training element on just how to read a graph. And if you're a report writer, just how to present a graph or visualization. The FT, the Financial Times, has got great expertise in this. The Royal Statistical Society, for which I used to work, has great expertise in this. There's lots of good stuff about how less is more on graphs, really bring out the salient points. But I'll stop there, otherwise I could bore you to tears on that for hours.
Right, so I agree with that. There's one of the charts in particular, which is about future projection of divergent risk in different categories, which has about 9 or 10 lines on it, which all scatter in different directions, rather like a shotgun, I suspect, across a field. And actually following any of those lines and really understanding any of it is very taxing. Councillor Churchman. Right. Well, I think you've got some very good inputs there, Joe. I think visual is the key thing. Face to face is very key. Short, bite size, not too complicated, tacked on, and simple graphs.
Simple graphs.
Apart from that, we're all good.
Thank you, members. That's really helpful. I mean, it is, I think, really helpful. I've just got to work out how to fit all of this into my extra work that I've already got. So no, it's really helpful, and I do absolutely note your comments on the depth and breadth rather than the technical specialities. That has been fed back to Hyman's on their survey, both through councillor comments and through officer feedback, and not just from this fund. So so it is something that they are taking on board. I will try to accommodate some of this into future learning papers when we're putting papers together, try and reference to material. I would also say, as well as asking questions in meetings, which are obviously very welcome, if you have questions outside of the meetings, do drop me an email. I may not respond immediately, but I can definitely work something in. And probably if you're asking the question, one of you's asking the question, all of you are thinking the same thing, so I can share that knowledge. Part of my thoughts as well is to look at the council's learning and development hub and potentially put some pension specific references on there that can be attempted, reviewed, whatever the word is, by committee members, officers and other broader elected members. And potentially putting a resource library somewhere, and I'm not quite sure where I would put that, that would have the glossary, that would have some of the previous learning material, some of the slides, because I know we do record the Teams meetings and we do circulate the slides, but unless you can keep remembering which email it was that they were sent on, or everybody saves them in a particular place on their own server to an extent, we need to have a corporate hub. So I think I will work with learning and development and potentially democratic services colleagues on establishing something somewhere where we can have like a learning for pensions.
Yeah, I suspect this is not an issue that's unique in any way to the pension committee. I think across the council, as we sought to introduce more about business units and more commercialisation discussions, I get that feedback on a very common basis. So I think if we try to address it for the pension committee, it is a council-wide issue as well that needs to be addressed about their overall level of being able to understand technical information, and in particular financial information. I find it rather disappointing that I attend a number of forums and I get the out of the meeting comment that I don't do numbers or I don't understand numbers, and I find that very disappointing because so much of what we're about is about numbers, and it doesn't matter whether it's audit or the pension committee or finance or it's the budget. Numbers drive us, and we might want to be talking much more about cliff falls and dark skies and those other things which have an importance in a different regard, but numbers are what underline everything that we seem to do as a council. Councillor Andre.
Thank you, Chair. Yes, in support of that, I think we're all aware of the limited officer resource that we have. There is a councillor development group, which I'm sure you're aware, and it's headed up, it actually comes under my portfolio on lifelong skills under Sarah Teague. So I think it's an excellent idea that you link in because there's training that I think it should be made available to all members because we are somewhat transient, and I think it would be good. And I do take on board the chair's point that it's not helpful to just say, I'm focused in this area, I don't do numbers, because I think part of what we are as members is pushing ourselves out of our comfort zone, whether we like it or not. But I think to link in with that councillor development portal through the councillor development group and Sarah Teague would be very helpful. Thank you.
Good. All right, with that, I think we'll thank you, Joe, again. Hopefully you've got a number of points to take away there. One or two to think about. All right, so moving on to item 12 on the agenda then, which is the investment performance and funding level. An interesting area. This is page 191 in your document.
Thank you. Very high level overview. The markets are coming back, but some of them aren't. Some of them are. Yesterday it was good. Tomorrow it might be bad. Who knows?
Highest ever FTSE. It's very volatile.
Yes, ridiculously volatile. So we don't have anybody from Hyman's investment attending today because there's nothing specific really to highlight. We don't have a fund manager attending because the agenda was too full. So it was really just a case of highlighting to you that we have our investments as they are on page 191. And you will note, if you compare the last column of percentages to the first column of percentages, you'll notice that we are not quite in balance with our actual versus our strategic asset allocation. Some of that is because we are waiting for disinvestment from certain asset classes to invest in other asset classes, some of which is, some of it is just purely due to market forces. Some asset classes are performing better than others. So as they increase in value, they increase in percentage and therefore reduce the percentage of others. There's nothing to be concerned about in terms of the investment against strategic allocation. We remain comfortably funded, as was spoken to in the triennial valuation. So our assets are currently 102% of our liabilities. So we are not in a bad position. We do continually monitor this. We are continuing to look at our investment strategy. So at your May meeting, the investment strategy work that was commenced and reported initially in November, we presented again, and we'll be looking at any revisions required to our investment strategy following the valuation. We are not anticipating the introduction of any new asset classes this time, maybe a tweak in some of our balancing between income protection and growth, which we will discuss in more detail, and there will be reference to learning materials in your packs for the next meeting. The key point, which is still ongoing, is we are in the process of acting on the instruction to transition our UK equity holding from Lion Trust to BlackRock. That work is being looked at as we speak, and we're anticipating that work, the transition being completed either at the end of this month or by the middle of March. We're avoiding month end, and we will definitely be avoiding year end. So it will be done, either be done before the 31st of March, or it will not be done until after the beginning of May, because we just need to make sure that that's there. One reassurance, BlackRock in a presentation to the Access Group have confirmed that they have reduced their allocation to tobacco. They still have a small allocation to tobacco, but they are underweight compared to the index. They are highlighting concerns in the industry and regulatory uncertainty, so they are reducing their allocation. We haven't approached them as yet about a firm exclusion, but they are reporting, and we will report back on their approach. In terms of the transition, we did look at doing what's called an in-specie transfer, so effectively looking at what assets, what companies were held in the Lion Trust portfolio, were the same ones held in the BlackRock portfolio, and then effectively swapping them in, so swapping the holdings in. But that was going to cost in the region of about £1.1 million for transition fees on a £92 million portfolio. So not huge costs, but quite substantial. So the alternative that we're actually pursuing is a cash sale out of our Lion Trust holding and a cash purchase of the BlackRock holding, which whilst being slightly, sounds counterintuitive, is actually £500,000 cheaper in terms of fees. So Hymans are supporting us in terms of managing that transition on our behalf and working with the advisors, and that will cost in the region of about £12,000. So, but on a £92 million portfolio, we will be in the right place. Lion Trust fees are significantly lower. Lion Trust fees are significantly higher than BlackRock, so there will be a saving coming out of that. And their performance over the past is not excellent, but far better than the Lion Trust performance has been. They are following the same index, so they are active managers. Their management, their investment style is different to that applied by Lion Trust, but is seeming to be more successful. Obviously, past performance is no guarantee of future, but so I think that's probably all I needed to say. I've covered all of the items under 12 at this point, so I'm happy to take any questions, as any.
Thank you for that. I think I've managed to follow the backwards and forwards, but just for clarification, so what you're saying is effectively we are cashing in our holding with Land Trust, which was Majedi. So obviously part of that performance will be the historic Majedi. So and then we're transferring and buying into BlackRock. So we'll have a different portfolio. Right, okay. Rather than what you said, because it would have been more expensive to keep the same. So effectively, we would have been transferring, keeping those assets, but just changing changing the owner. So we're actually cashing it in. So it will be, yes. Right, yeah. But it will be obviously a different investment portfolio with BlackRock.
And
But because they've got a different management style, are you saying it's more active?
they're both active managers. They have different in-house styles, so they both are managed. Their performance is judged against the benchmark of the FTSE All-Share Index, but they have their active management means they don't have to be exactly to the index. They have discretion to invest more in certain industries or less in certain industries and in different stocks. And Majedi did as well, but they have different styles and they have different managers, in-house managers that look at with a different perspective on the market. So where Majedi might be very focused on, and forgive me, this isn't true, but they might be very focused on oil and gas, for example. And BlackRock may say, actually, we don't like oil and gas, we like financials. So they are still in the UK equity space. So they're still looking at the UK stock exchange effectively. They're still running performance against the UK benchmark, which is the same, but they're focusing in different directions. So their style is different. Their performance will be by necessity be different, as opposed to the passive style of management, which effectively says, this is the benchmark index. We will hold exactly what is in that benchmark index. And that's what we've got for UBS in terms of our climate aware strategy. There is an index that is climate aware and UBS holds that stock. So for passive, there's quite a lot of movement in the stock holdings, whereas for active, it's less frequently traded because it depends on the manager's style rather than the basis of the index. Does that make sense?
Just to follow. So, I mean, presumably Hyman's have full oversight, so because they are our managers anyway. Just one more comment on the table. I think it's really interesting when you look at the different asset classes. For example, the property under the alternative funds has the proportion of the total fund is quite a lot lower at 5.7%. But of course, the property markets, I would imagine there's quite a long lag. And we did see a big rise in property, but we've also subsequently seen a fall. So presumably that figure, it's sometimes quite difficult, isn't it? Because this is only a snapshot in time and it's not necessarily reflective of the situation that we have now. But looking at the different asset classes, the way it's laid out, it's quite obvious that obviously some are more liquid than others, but it's very reassuring, I think, to actually look at the access percentages in their funds that all seem to be outperforming.
Thanks, Chair. Yeah, a few questions if I could. The percentages, although they're relatively small figures, they are actually quite a bit out in some cases as to what we plan. I understand that could be because there's the transition and we don't want to force transfers. That could be a costly process, but and also some of the targets would be within a range what we'd expect rather than necessarily an exact figure. So I kind of get that. Do we have a feel for how far some of the differences might be due to performance? Because someone's, invested in something and it's performed really well, but its cash value obviously is at a higher percentage. So that's one possibility. And also, should we be setting ourselves a target for cash? Because we stand at 0 at the moment. I guess inevitably you have to have some cash in the system. But also conversely, I think we ought to question, should we really be having £13 million in cash? Because that's a very low return asset. If you look at it, for instance, compared to what we're holding in partners infrastructure, we've actually got more in cash than we have in the whole of that classification at the moment. So it's actually costing us money to have in cash.
The very reason that we have 12 million in cash at the moment is because we're waiting for partners to call down their next investment. So we can't invest in partners until they tell us that they want money, that they've found an asset for us to invest in. So we are holding the funds in cash pending that call, because if we don't hold the funds in cash, we then have to disinvest from one of our other investments at the time that the call is made, and that may be the least attractive time to sell that particular asset class. So we took a view with the investment consultants to take a chunk from our global equities, which was massively overweight, and put it into cash pending the sale of the calls from partners. So it is a tactical decision, acknowledging that the rates are very small at the moment, potentially going bigger, so we might get better. But we are waiting for those calls to come through. In terms of a tactical allocation, absolutely agree, we probably should have something, but that's something that we need to look at. I think we would have a range of allocation rather than a specific, you must hold X% in cash, but it is to do with managing liquidity and managing the investment flow. And then in terms of performance, yes, we are very much at the whim of the markets, and much as Councillor Andre said, in terms of property, we can't physically put any more cash into the property market because at the moment there isn't anywhere for us to invest it. Most people, a lot of funds are getting out of property at the moment. So there's a big time lag. I think one of the funds in Access has an 18-month waiting list to disinvest from their property portfolios at a cost of 15% of their fees. So property is not probably the best class to be trying to move around in and out of at the moment. We are looking at the strategic asset allocation. This is part of the work that Hymans have been doing for us. Hymans were involved in assessing the UK equity situation, so it's on their recommendation to this committee that we've made the movement that we have. But as I say, at the next committee meeting in May, you will receive the report and the recommendations from Hymans as to what we need to do with our assets, if we need to make anything, and how we structure that. And that will be done over a period of up to 3 years, depending on the market change. So by the time we get to the next valuation, we will be or should be as close to our required allocation as we expect it to be. Similar to, this is our position against the allocation that was decided at the 19 valuation. So it's a bit of a lag, but we don't want to do everything at once to blitz the market and cause market disruption.
Oh, you did mention about reducing their involvement with tobacco. Do you say we've also got the option, we might have the option to completely disinvest from that area?
We have discussed that as a committee, and that is something that I think the committee would prefer. It would require an agreement with the other Access fund that is invested in the Black Cross fund, and it's something that would be a strategic request to the manager. I think the allocation to tobacco is something like 2% of the BlackRock portfolio, which is would be 14%, so 2% of 14% of our total portfolio, very, very small beans in comparison to our 650 million pound portfolio, but it is something that we can look to explore in the future. Sorry, we were informed, oh, sorry. The Scheme Advisory Board had a investment and governance meeting yesterday, at which there was supposed to be an update from the Department for Levelling Up Housing and Communities on their various consultations that we're expecting from them. The representative from the department didn't attend the meeting because there was no update to give. So frustratingly, there is no update on the launch of the climate change reporting regulations, which are due to come into force from the 1st of April 23. There is no update on the McLeod remedy, age discrimination remedy that's supposed to be enacted by October 23. There's no update on dashboards, which is again due to be implemented in October 23. There's no updating on the pooling regulations. There's no update on the good governance regulations, all of which are supposed to be enforced by the end of 2023-24. So a little frustrating that we are again going to be effectively running behind the curve because we don't know what we're preparing for, and we'll have to be ready for it when it hits. So just a warning that there will be a lot of change coming up over the next 12 to 18 months.
Just wanted to ask about the dashboard. You know, is there, it's been delayed, we know that, but is there anything from our point of view? Nothing further. Are they sort of coming up with a date when it will come into operation?
I'm not sure yet. We're just going to wait for it to happen. All we're doing as a fund at the moment is cleansing our data in readiness for when we actually have to upload that to it. And we're working closely with Haywoods, who are our supplier, for them to actually connect to the dashboard. So I haven't got any further information on that.
Paragraph 4 of 69 notes that quite a bit of that report is assessed as open, and I'm right. For what reason would we not carry out our business on those open parts, as long as we did not refer to Appendix 4, as is often the custom and practice in other places?
Thank you. Subsequent to the publication of the papers, I was requested by the Access Support Unit to withdraw all papers under item 16 from publication due to the confidential nature of one of the disclosures that I'd made in one of the paragraphs that had been picked up by the press and was causing a furore, shall we say. So I was asked to withdraw the publication of papers 16A and appendices 1, 2 and 3 to that paper for reasons of confidentiality from access support units. So to an extent, whilst we would normally be able to discuss the open parts in open session, unfortunately, it's been requested that all of the items of discussion of access would be treated as confidential for reasons of third-party legal privilege, I believe.
And that was the furore, that third-party legal privilege. A furore in the press is not itself a condition criterion.
It is something to do with the business affairs, it's legal privilege and something to do with the business affairs of a third party. So apologies for that.